Hi, everyone. Mike White here. Welcome to this week's vlog post. I've been posting these vlogs and been writing this blog post for many years now. And, the main purpose of doing this is to share information with you, the viewer, with my clients, with people who casually look at this information. And sometimes it's even people outside the industry. You'd be amazed at the different people that have subscribed to this channel who follow this information on the various social media sources that I put out there. And I do this because I just want people to have perspective. Certainly, I'm not always going to be right about things, but sharing back and providing feedback to you about what I see, what I learned from my clients out on the streets from all different parts of the country, I think helps provide information back to you guys so that you guys can make informed choices. And I think informed choices are really important. Not all things work for all people in all markets, but at least knowing what all your options are, I think is invaluable. And part of this comes back to, and the reason I bring it up now is we look back to, prior to Thanksgiving, when I was putting the blog posts out and we were talking with my clients and you and saying, it's really important that we get out there and talk to our clients, the ones that are pre-approved, the ones that are looking, and really encourage them to find that house, to make that offer, to lock in that contract and get that property before we hit the first of the year and we see increased volumes and head to the spring buying market, because those people who were looking for property in November and December going into the holidays and during the holidays were obviously very serious about buying a house. And those people who would show their houses were very serious about selling those houses. And sure enough, a lot of you went out there and did this. We put together a lot of transactions that wouldn't have normally taken place. And we got into January and we saw an uptick in activity. And it's not just in one or two markets, but pretty much across the board from the people that I speak to, that housing prices continue to grow. We keep seeing the numbers. And obviously, while all things, translate into local markets, we're seeing appreciation, annualized to 5, 6, 7%, on a national number. And so we talk about what is the true cost. We've talked about the cost of waiting. What happens to these properties as they continue to appreciate, as we see demand, as we see these things happen? And again, if we just use 5% appreciation rates, 5%, and you can work the math yourself in your local area, a $300,000 house appreciates more than $1,250 a month, every month. A $400,000 house, well, that's going to appreciate $1,700 a month. And so what happens to somebody that waited since, November? Well, I'm going to wait till after the holidays and then we'll pick it up after the first of the year. Or maybe I'm going to wait until after I get my, income tax refund, or the weather gets nicer, or whatever. Do people know, do your clients know that sitting on the sidelines, not only with increased competition drives that price up, but the cost of that house? Well, you know what? It's gone up $5,000, $10,000, maybe more, depending upon the price that you're working with. And people are not thinking about that true cost. They're not thinking about true cost of those decisions, about those prices, that competition. In some markets, we're seeing back in as short time ago as, again, November and December, being able to get seller concessions and seller pre-aids and negotiating details of that transaction, to now January, February, coming into March. I've got people who are seeing prices going over asking, and sometimes prices over asking as much as 5 or 10%. And, that's significant when you couple that with appreciation. And what's the true cost? So my point to you is, as an expert, yes, we have to share that, but we also have to look at the true cost, the true decisions that it makes to us when we sit here and we say, again, let's just frame a 7% interest rate. And I know that, this stuff varies, and a week from now, a month from now, whatever, depending on the price, product, and program, but you can do the math. So I'm just giving you examples that we all know that the cost of money comes down to really, what's the payment? And we all know the client is qualified for a payment, never a dollar amount. And so that payment that they're qualified for is also inclusive of other debts. So we know two people or four people with the same exact job, the same exact income, same exact credit score, buying the same exact property qualify for vastly different amounts of money based upon what their debt to income ratios are. Somebody's going to qualify for a much larger mortgage if they don't have two cars and a boat loan or an RV or whatever else is going on. And a lot of people don't understand that fact, that when we sit here and say, do you think about things? And I've had it happen recently with people with pretty good incomes who are, whatever. Somebody got a big promotion and they were really excited and they ran out and they bought two new cars and they were very excited about having those two new cars, and they were pretty expensive cars. And I was like, now that we got the cars, let's go out and look at houses. And they were very disappointed that they were making, quote unquote, all of this money and they couldn't get qualified for a loan that would help them buy the house that they really wanted. And the problem is they didn't understand that for every $100 that they had in a car payment, it was costing them about $15,000 in purchasing power. So when you're looking at people with car loans, whether it be no car loans at all, and now we see 20% of car loans are over $1,000 a month. But you start looking at people that have $500, $600, $700 a month or more in car payments. And what does that cost them? Well, that same money could be used for 75, 85, 90, or over $100,000 or more in purchasing power when it comes to buy a house. And what does that mean, not only for car loans, but the RV or the camper or the boat or who knows whatever people are spending their money on. And I think it's really important that you, as the professional, review this information with your clients so they can make informed choices, so that they can look at these things and say, you know what, maybe, again, the allocation of our money, maybe we're not putting 40% down on a house or 30% down on a house or 20% down on a house. It would be better for us to use some of that money to pay down debt or pay off debt or to lower their expenses in other ways. But they're only going to know to do that if you provide them the choices, because ultimately people may not always make the best choices or the right decisions on what to do and how to do it. But the reality of it is they're much more likely to make a better choice for them if they have all the information. And that's what you are there to do, is to give them all the information that you can bring to the table, educate them onto the value of what the costs truly are, and be able to provide for them all of the options so that they can make an informed choice, a choice that works best for them, and clearly set you apart from other people who will just take things on the surface and tell people what they can and can't do, because let's be honest, it's generally not always the way things appear at first look as to what can really be done in the long term. As always, if you have questions or comments, it's Mike at imtcoaching.com. We'll talk to you again next week. Take care.